Yo, welcome back to another episode of the Jack Mallers Show. I am your host, Jack, and you are listening to what I like to call Mailbag Monday, episode 83. For those listening, nothing changes. For those watching this on their own time, nothing changes. For those of you that join me live, I'm obviously not in my empty closet. I'm not in Chicago. I'm on the other side of the world. And so for time zone reasons and all sorts of stuff, I had to pre-record this one. Let's see, what time is it? It is 9:21 a.m. in Chicago as I'm talking to you guys right now. So recording it in the morning of U.S. hours, I will upload it as it premieres as if it were a normal live stream. But for those that join live, that enjoy the live sessions, I apologize for that. So this will be a normal episode, one long rant from me, a little update on Strike in 21, and no Q&A today because I'm hanging out alone on this balcony behind or in front of, the sea. Cool. Okay. Without further ado, let's get started. Ladies and gentlemen, I'm talking to you guys at a Bitcoin price of 114,820 US dollars. That puts Bitcoin's market cap at 2.29 trillion US dollars. Our all-time high remains at $124,400. That was set on August 14th, 2025, so about a month ago. We're currently 7.5%-ish off of that all-time high. I find it a little funny. The price action, Bitcoin's made higher highs in the month of August and lower lows in the month of August. September so far looks generally pretty good. This time last year, the Bitcoin price was about half or a little less than what it is today. So Bitcoin's up about 100% since this point last year. And everyone's pissed and everyone's freaking out. Just a reminder, stay humble, stack sats. It's the best performing asset in the world that you own. Patience is virtue. And touch some grass. Touch the sea behind me. I mean, this thing is a monster. I think we're going to have a massive Q4, which I'll get into in a second. But I don't know. Every time I start these episodes, I start with what the price is. And people are so wound up. And the price I'm reading looks pretty good. $115,000 Bitcoin. I'll take it. For those of you that timestamp in block height, I respect the shit out of you. It's amazing. I'm talking to you guys at Bitcoin block height 914,813. Awesome. Okay, the title of my rant today is Policy is the Plot, Why Bitcoin Thrives in Financial Repression. So the theme for today is that we're seeing a lot of things that are weakening the dollar. We're seeing a lot of policy that plans to debase the dollar, debase our debt. And oftentimes, people are viewing this as a crisis, as a mistake, as something that needs to be fixed. And I think we've finally reached the point in our fiscal journey as the United States of America, as the Federal Reserve, as the fiat regime, as we know it, where that's actually policy. That's why it's policy is the plot, is that a weaker dollar, people should get used to that. A fiscal dominant Federal Reserve, people should get used to that. Debasing the debt, people should get used to that. Neutral reserve assets being remonetized in gold or monetized in Bitcoin, people should start getting used to that. And I think Bitcoin's going to really, really thrive, not only in the long term, but I expect a really bullish Bitcoin Q4 for a lot of reasons. So first, let's discuss policy as the plot. So this tweet I thought was spot on the money, wanted to open up the rant with it. It reads, "This is a real-time Mar-a-Lago Accord in my view. The strategy of letting global yields rise relative to U.S. yields is central to weakening the dollar. What some see as a market shift, I see as policy, a clear move toward dollar devaluation. The implications extend further, especially for emerging markets, which I believe stand to benefit significantly from this environment." So, for those that are longtime listeners, we've been saying this for as long as this show's been around. The only way out is through debasing the dollar. You cannot raise taxes. You have to tax the populace through inflation. And a sneaky way to devalue the dollar is to allow global yields to rise relative to U.S. yields. Okay, when U.S. yields are strong, the dollar's strong. When the U.S. yields are lower, people will sell the dollar for the euro, for the Swiss franc, for the Japanese yen, for the British pound, if they're getting better fixed income yields. And so the U.S. allowing global yields to rise relative to its own is a way to weaken the dollar. And I'm talking about Europe, so Germany, France, Australia, Japanese yields, so across the board. And as the tweet said, I fundamentally do not believe that this is a mistake. I don't think that this is a crisis, at least one that isn't known. This is policy, and policy meaning we're deciding to do this, the United States of America. We are allowing the dollar to get weak, to lessen its role when it comes to world reserve. And we've talked about on the show plenty of times, there's a difference between the world reserve currency and world reserve assets. And the United States cares deeply about the dollar still being the unit of account, how we price things globally, and the medium of exchange. They want oil trade in dollars, which we'll get to in a second. They like the fact that stable coins are proliferating throughout the world. They like that. But as far as world reserve asset, how people store and save wealth, time, energy. In this fiat era, it's been the US dollar, it's been US treasuries. Those days are over, and the United States is very slowly starting to admit that fate. And this is becoming policy. So let's take a look at domestic stress cracks. So what's happening inside the United States of America, we're showing significant signs of trouble, of stress. We are cracking internally. And this is causing a lot of the policy that we're seeing. Sherwin-Williams suspends 401k matching amid weak sales. So Sherwin-Williams is an interesting company because it's unbreakable. At least it was perceived to be as such. Super solid Midwestern business that has survived everything. It has not ever gone down with a crisis. It's not over indebted. It's not over leveraged. It's a very sound, fundamental business. Now, the press release the news article read, Sherwin-Williams announced plans to temporarily suspend the company's matching contributions to employees' 401k plans, citing weak sales amid economic and tariff headwinds. In an internal communication obtained by Cleveland.com, CEO Heidi G. Petz attributed the decision to several factors, including high mortgage rates and have pushed housing demand to near historic lows, and inflation that has reduced DIY demand for 3 consecutive years. Tariff policies have also decreased industrial demand and increased costs for the paint and coating manufacturer, Pet's letter stated. Sherwin-Williams is not immune from these conditions, which have lasted longer and been more impactful than anticipated. Unfortunately, customer demand remains soft, and in some areas, it's getting worse. The suspension, which goes into effect October 1st, affects the company's current policy of matching 100% of the first 6% of eligible employees' 401k contributions. The company implemented similar suspensions during the 2009 financial crisis and 2020 COVID pandemic, eventually restoring full matching as conditions improved. The CEO said Sherwin-Williams intends to do the same in this case, but did not share a potential timeline for when full matching would be restored. Sherwin-Williams has already undertaken what Petz described as disciplined, responsible, and aggressive cost savings measures, including reducing third-party spending, simplifying operations, delaying new hires, and restructuring global assets. Okay, there's a lot to take away from this news. The big thing that I want you guys to understand is where there's 2 economies, okay? And this is really the story of the wealth gap in the United States and a lot of the vitriol, anger, stress, and divide that, at least as an American, I can speak to that a lot of us are experiencing. What happens is when we're debasing the dollar, that causes inflation, and particularly in assets, and particularly in scarce, desirable assets. Meaning, The real estate on the water, the real estate on the beach, the top floor of the building in Manhattan goes up more than the abundant real estate that no one really cares that much about, that doesn't have that much of a scarcity value. You can maybe create a bunch more homes in the Chicagoland area, but you can't create a bunch more homes on the water because there's a scarcity element to that land, right? Same thing with gold, same thing with Bitcoin. And so what we've seen is Wall Street, or just, how would you say asset holders, the folks that actually own scarce desirable goods, they're getting incredibly wealthy as time goes on. People misunderstand that having interest rates or having, Fed set rates at 4.5%, that's actually very stimulative because the United States is paying such a high bill on its interest costs, and though that money is going back into the economy. So people that own a ton of T-bills, a ton of short duration US debt, they're getting paid out a ton of money, and they're going yachting, and they're buying real estate, and they're traveling, and they're buying Bitcoin, and they're buying gold. Now, the other side of the world, or the other side of this coin, these people are struggling because if you're living paycheck to paycheck and you don't own a home yet, you don't own one Bitcoin yet, you don't own a good gold position yet, you don't own these scarce, desirable assets that you're either consuming in homes or a car, or you're saving in Bitcoin and gold. These things are inflating away from you, so they're getting harder and harder to acquire as this story plays on. And so the people that don't own these things are getting poorer every single day in purchasing power terms, in their ability to acquire these things. And the people that do own these things are getting exponentially wealthier and not necessarily doing a lot of work per se, right? And so this, in my opinion, causes the divide, the anger, the tension in society. The ability for someone to work so hard, sacrifice and do everything right, and still have a life that they don't feel is worth living. And what we're seeing is there's two economies here. The Wall Street economy, the Larry Finks of the world, they're killing it. Breaking records with their ETF. They own a lot of Bitcoin. They own a lot of assets. Their CAGR on every single portfolio is through the roof. They own a lot of T-bills. They're getting paid 4.5%, 5% to sit in this short US debt. This is financing their mortgage, their private planes, their yachts. But the Sherwin-Williams customer, the do-it-yourself, paint-your-house customer, the new home buyer customer, what Sherwin-Williams is saying is we're all getting destroyed. Our business is down tremendously. Sales are down, and that's because middle to lower America is getting crushed. And the only time Sherwin-Williams did this is 2009 and 2020. 2009 and 2020. So it's an interesting idea. Are we in a recession? No, we're not in a recession technically, but it depends who you're talking about. We shouldn't look at America as this one big economy anymore. There's two economies, okay? So this from the Wall Street Journal. The middle class vibe has shifted from secure to squeezed. After months of tracking high-income earners' positive economic outlook, America's middle-income households appear to be losing confidence. Let's take a look. For the American middle class, it has been a summer of cooling confidence. Consumer sentiment dropped nearly 6% in August, after trending up in June and July, according to a closely watched index from the University of Michigan. Pessimism about the job market increased, with more people surveyed saying they expect their income to decline, according to polling done by think tank in the Conference Board. The middle class, generally considered to include households making roughly $53,000 to $161,000 a year, is playing an outsized role in the waning of optimism. After months of tracking high-income earners' increased confidence in their economy, households making between $50,000 and $100,000 made an abrupt about-face in June. They now more closely resemble low-income earners' gloomier views, according to surveys done by Morning Consult, a data intelligence firm. There was a period of time, briefly, where the middle-income consumer looked like they were going to be dragged up by all that was going well in the world, said John Lear, chief economist at Morning Consult. Then things fell off a cliff. Evidence of a squeezed middle class is mounting. Several CEOs across the dining, retail, fashion, and airline industries have said their middle-class customers are increasingly strapped, even as high earners keep on buying. And this is it, guys. And I've said many times before, this fiat regime, this fiat era has decimated the middle class in the United States of America. What do I mean by that? It's really simple. You either own assets and are protected and are benefiting from debasement and destruction of the currency, or you don't. And that's it. In a prosperous society, there is a middle class. Let me explain it to you guys this way. If the third floor is the top floor, the penthouse floor, the Larry Fink floor, the Wall Street floor, the elite floor, and the first floor is non-asset holders, paycheck to paycheck, no matter how hard you work, if housing is inflating at 20% a year, you have to be getting a 21% raise every single year to just be making marginal progress towards owning a home, right? And there is no second floor. So you have the top floor and the third floor. The first floor is the bottom floor. If there's no second floor, the third floor people can't get to the first floor. Elite asset holders can't become poor. All they do is sit on their assets. They're not doing any proof of work for society. They're not doing fuck all. And they're getting rich. And the first floor people can't get to the third floor. They're working as hard as they can. They're getting degrees. They're working 2 jobs. They're sacrificing parenting their children so that both parents have income. They're saving in high yield savings accounts. They're not getting close to getting to the third floor, no matter what. That's a very destructive society. That's a pain society. That's 2 different economies. Larry Fink loves getting the yield he's getting on T-bills and watching Bitcoin go from 20,000 to 115,000. He's swimming in it. Now, Bitcoin's unique because it's the only thing all of us can buy and benefit from. Not all of us can get fancy real estate that outperforms inflation. But all of us can get Bitcoin. That'd be my message to the first floor. But to bring it back to the point, a healthy society needs a second floor. Having no middle class is very destructive. And what ends up happening is the rich get richer and smaller. The third floor is not nearly as big as the first floor. The first floor houses like 70, 80% of the population. The first floor is the minority, the wealthy minority. And that's what we're seeing here. That's what we're seeing here. And it happens because when your job is to export the currency, be the world reserve currency, you don't have jobs for these people. The way to get rich in America is to be a financier. Wall Street, finance, trading, hedge funds. You're not actually making real shit. You're not actually providing tangible things to the people around you. All of the manufacturing jobs, they're in China. Apple doesn't want to make the iPhone in Manhattan. Rent in Manhattan's $5,000 a month. Apple's margins would be crushed. Stock would go to zero. The iPhone's made in whatever, Sichuan or some place in rural China. And so when your job is to export the currency, you're also exporting jobs. You're also exporting the middle class. And you're creating a division of you either own assets and you don't. And this was such a rigged game before Bitcoin. Before Bitcoin, none of us on the first floor could own anything that the third floor owned. Nothing. Now we get Bitcoin. Bottoms up movement. Bottoms up movement. So some of the charts that were referenced, here's U.S. consumer sentiment across the income levels. So income over 100 grand a year, it's great. Income 50 to 100 grand, not great. Income under 50 grand, even worse. And so you guys can start to see the division and the trends here. If you're making enough money, if you can afford things on the third floor, you're fine. Now, what I would want to add to this, obviously the data doesn't exist, is Bitcoiner sentiment. Because it doesn't matter how much money you're making, whether you're making under 50 grand, 50 to 100 grand, over 100 grand. If you found Bitcoin, you understand Bitcoin, you've lowered your time preference, you earn more money than you spend, which allows you to save. You produce more value for the world than you consume, which allows you to save, and you save it in Bitcoin, and you've lowered your time preference. I would say sentiment is through the roof. You're getting 50 to 60% CAGR every year for the last 10 years. And that's the escape. Bitcoin is that exit door, guys. It is that exit door. The New York, what journal was this? Wall Street Journal. They reference the University of Michigan data. So this is the tweet that shows the data. UMich prelim September consumer sentiment falls to 55.4, which estimates had it at 58. Not good. And the point here is stagflation is hammering the middle class. This reading is sub 2008. So we are getting middle class consumer sentiment readings that are below the 08 financial crisis, guys. So are we in a recession? Are we in a crisis? Do we have problems? Depends who you're talking about. Bitcoiners have escaped. They found the exit door. All of you listening to this, we're on the boat on our way out of the sinking Titanic. We have hope. We have a hard, scarce asset that nobody can take from us, that nobody can print on us. No one can dilute our share in the 21 million. Fuck that. But people that have not found this show, have not found Bitcoin, have not downloaded Strike, have not set up the DCA, sentiment is below 2008. Americans face biggest increase in health insurance costs in 15 years. The pain will keep coming. And so when you wonder, why does Besson want rates down so bad? There's a lot of reasons. One of the reasons is the country is struggling mightily. Absolutely. They're going to have to let inflation go just to get the economy off its feet. Now, this I thought was fascinating. A third of U.S. states could already be in a recession, because I was looking for data that didn't look at a recession just with everyone included with these bullshit definitions and these bullshit metrics. Everybody knows not to trust a technical recession. A bunch of nonsense. And this said 33% of U.S. states are already in a recession. Monday's analytics finds that states accounting for 1/3 of U.S. GDP are in or at high risk of recession. On the other hand, California, Texas, and New York are holding steady, helping stabilize the national economy. And this is it, guys. Look at the middle of America. Look at Illinois, where I live. Crushed, decimated. It's yellow, orange, and red in the middle of the country. That is the middle class. That is what is now the Rust Belt. The Rust Belt is rusty because all of those jobs in manufacturing is in China. In 1971, when we said we're not going to obey the laws of Mother Nature, we're not going to live by the laws of physics, we're not going to live in the real world, we're going to print time and energy out of thin air, force people to use it through violence, and take on the role of exporting the world reserve currency and importing real stuff. What do? The edges of the country become tremendously wealthy. California, Silicon Valley, New York, Wall Street, those are the winners. The losers are everybody else. How did Trump win the populist vote? How did he win? How did he do that? You don't understand how much of the United States is struggling. This is two different economies. This is what it looks like when you want to be the world reserve currency and you don't use neutral assets. Neutral assets that no one can print, that are bound to the laws of physics, that obey Mother Nature. No country, listen, people say, oh, you're American, you're so lucky. In many ways, we are. But in many ways, we're not, okay? Being the world reserve currency is a disease. Triffin's dilemma is real. And none of these things scale. None of these things last. Because they're not real. They have to come to an end, and they're coming to an end right now. This is a chart from Luke. This shows U.S. consumer confidence over stocks. SPX and the NASDAQ. What you're seeing is usually U.S. consumer confidence trended with the stock market. And what that tells you and what that shows you is there's been this kind of like bullshit myth, this misty like pitch from the US government. They've been saying, look at the stock market. Stock market's all-time highs. You guys are killing it. Everyone's savings account's going up, right? Your 401k, killing it. And everyone believed that shit. Everyone believed that shit. Not anymore. That's what this chart shows. If you look at the far right, the stock market's going up. U.S. consumer confidence is going down. The system is breaking. Nobody is buying that anymore. Inflation matters too much, or stagflation matters too much. People are losing purchasing power. You cannot keep lying to them. Oh, don't worry about purchasing power or inflation. Look at your Nvidia stock. No. Gold has outperformed the stock market since the divorce of the gold standard. You're better off just holding gold than investing in any of this garbage. So this chart tells me the gig is up. U.S. consumer confidence is down despite an all-time high stock market. You watch Scott Bessent go on, well, you know, if you take a look at the stock market, the Trump administration's done an incredible job. Yeah, but nobody cares about that anymore. Nobody cares about that. There's too much pain. Next chapter, liquidity mountain and fiscal super cycle. Now, in the month of August, the U.S. government collected $344 billion. Just one problem. $344 billion. That's great, right? If you annualize that out, that's a ton of money. Killing it. They spent almost $700 billion. So our deficit in August was $345 billion. If you annualize that out, our deficit would be over $3 trillion, almost $4 trillion a year. Guys, this is policy. Again, people look at this and say, this is a mistake. This is a crisis. This is Putin's fault. This is the war's fault. This is China's fault. No, I need to tell you, this is policy. This is policy decisions. They are purposefully making these decisions. They're going to try and grow their way out. They're going to run it hot. They're going to let inflation run. Real rates negative. Debase. Bitcoin is going to win. It's the exit door. It's all of our ways out. The middle of America, that yellow, that orange, that red that's living in a recession, that middle to lower class. There's no longer a middle class. If you don't have the right assets, you're the lower class. It doesn't matter anymore. You have to get yourself some Bitcoin. It's the only ticket out that is sold to all of us. Great. Larry Fink adopted Bitcoin later than me, and he found his way out. I wasn't given the opportunities Larry Fink was given. I'm telling you, Bitcoin is the only ticket available for sale to everybody to get out. If you're listening to this podcast and you're a top financier on Wall Street, good for you. Good for you. You don't have to listen to the rest of the episode. You got it, bro. You figured it out. Good for you. If you're not, your way out is Bitcoin. This is policy. These are purposeful decisions. I'll put it to you another way. Their only way out is Bitcoin. Gold and Bitcoin are absorbing all the liquidity and constantly making new all-time highs and performing the best because they have to. The dollar has to go down. Something else has to go up. So their only way out is Bitcoin. Now, they don't think about it that way. They think about it as their only way down is debasing the dollar, debasing the debt, and effectively defaulting through inflation, a soft, long default. But the sooner you find the exit door, the better you'll be. There's now $7.5 trillion in money market funds. And this is just the level of liquidity that Bitcoin is going to see soon. When rates start to come down, this capital needs to find a new home, needs to find returns. The amount of money that is going to flow into assets that needs to find Bonds are getting destroyed. Real rates are negative and will continue to be. We haven't even started cutting rates yet. The amount of capital will be immense. This is Bitcoin over TLT, over treasuries. I mean, guys, and look, here's the thing. You look at these charts. I've been in Bitcoin since 2013. I watched Bitcoin go from $50 to $1,300. And then Mt. Gox gets hacked, Silk Road got busted, all this shit happened back then. And then it went all the way down to 200. And the chart looked insane. Like the hockey stick up and the fall down looked crazy. Now, it went from 50 to 1,300 to 250. Then it went to 20,000. I was like, oh my God, I thought $1,300 was a lot for a Bitcoin. Holy crap. And then it went from 20,000 to 2,000 or whatever, 3,000. You see these little blips down here? Every single bigger run ends up looking like a little blip. And you can see since 2020, I mean, Bitcoin's been ripping the face off of TLT. Since everything broke in 2020. Now this is gold over TLT. Look at this, relatively stable until 2020. My goodness. And this is the stock market. Now, gold and the stock market look the same over TLT. Everything broke in 2020. In 2020, a lot of shit broke. Now, Bitcoin is just a beast of its own. It's the pin that popped the balloon. But, I mean, here from Reuters, Ray Dalio last week, gold is a shield for U.S. market risk. He suggests 10 to 15% of your portfolio should be in gold. Now, I don't own any gold, because I own the better version of gold. I own Bitcoin, okay? My recommendation is own whatever allows you to be comfortable, sleep at night, and build the life you want to live. As much Bitcoin as that is. 10, 15%, sure. Listen, I don't know anybody that understands Bitcoin and it's 1% of their portfolio, 5%, 10%, 15%. If you get it, if you listen to this show, if you're one of me, one of us, I mean, guys, Bitcoin's 100% of mine. But you have to be comfortable. You'll get there. It's a journey. It wasn't always 100% for me. But my recommendation, I'm on the same page as Ray Dalio. But he's one of these, old-time portfolio manager dudes who, like, owning a bunch of shit, hedging, hedging is a fancy way of saying allocating money away from the winner. Owning a bunch of losers. I don't own losers. My dad once told me, you know the funny thing about my sport, and his sport is, investing, markets. It's like the funny thing about my sport is I don't have to hit a bunch of home runs and bat 300 to make the Hall of Fame. I got to hit one home run. And I got to hit it far. And then I'm a Hall of Famer. Then I put my kids through school. I give them the life I couldn't. Or my grandfather couldn't. I give them one home run makes you a Hall of Famer. Right? Think of it that way. Fuck the hedging. We found our home run. We found the best invention of our lifetime. Hit it far. Don't hit it 1% of your portfolio. That's my advice. Sue me. People are going to say, oh, Jack, you're so irresponsible. Oh, God, how could you recommend such a thing? Shut up. Shut the fuck up. It's my advice. You're an adult if you're listening to this show. You do whatever the fuck you want, okay? My advice, you found a home run. You want to make the Hall of Fame? You want to secure generational wealth? You want to put on for your family, your kids? Don't hit a home run 1%. Okay, let's play this video from Elon. This is just the icing on the cake, in my opinion.
Palo Alto and not Washington, D.C.
I'm at Tesla Global Engineering Headquarters in Palo Alto.
Yeah. So no more Washington, D.C. You're back at work. You're focused. Yeah?
Yeah, I haven't been to D.C. since May.
Okay.
That was a hell of a side quest.
That was a good side. Any lessons from your time in Washington, D.C.?
Uh, the government is basically unfixable.
Elon, only
I applaud David's noble efforts in this. It's good to have talented people in the administration, but at the end of the day, if you look at our national debt, which is insanely high, the interest payments exceed the Defense Department. I guess, sorry, War Department budget, and they keep rising. So if AI and robots don't solve our national debt, we're toast.
Yeah, I mean, so Elon thought he was going to doge the place up, and he realized he called it unfixable. This is policy, guys. This is it. This is it. The only way out is through debasement. They have to weaken the dollar. They have to debase the debt. They have to default through inflation, through currency debasement. That's their soft default. You heard it right there. What'd you learn from Washington, D.C., working with the president, trying to solve this problem? It's an unsolvable problem. Bitcoin isn't a fix. It's an alternative, right? Bitcoin's not a hedge. It's the replacement. We got to move on to a new system. Okay, let's move on. Geopolitics as currency wars. So, on this show, we like to check in on BRICS primarily. I mean, who really matters is China, right? We all know that. And what's fascinating is they are remonetizing gold and building a neutral reserve standard, a neutral reserve system to get themselves out. And, the United States at this point can't do anything about it. It's over. Now, listen, markets can remain irrational far longer than you can remain solvent. So I'm not saying it's over like it's going to end in a month, in a year, hell, maybe even a decade. These things take time. But the trajectory is clear. The next chapter has started. Like, that much I know, okay? Treasury Secretary says U.S. and the European Union must partner to collapse Russian economy. Whoa. Let's listen to our boy Scotty.
Last question. Russia. Overnight, Russia hit Kyiv in the largest aerial attack on the country since the war began, Mr. Secretary. It caused NATO, in fact, to scramble jets. You have a very high-stakes meeting on Monday with key economic officials from European countries. Is the administration prepared to impose sanctions against Russia now?
President Trump, Vice President Vance had a very productive call with EU President Ursula von der Leyen on Friday. She followed up with a call with me, and we are talking about what can the two, EU and the U.S., do together. And we are prepared to increase pressure on Russia, but we need our European partners to follow us, because if the U.S. and the EU do this together, we are in a race now between how long can the Ukrainian military hold up versus how long can the Russian economy hold up. And if the U.S. and the EU can come in, do more sanctions, secondary tariffs on the countries that buy Russian oil, the Russian economy will be in full collapse, and that will bring President Putin to the table.
Okay. All right. Mr. Secretary there with some big news on Russia. We really appreciate.
Well, there you have it, guys. Our form of violence, our form of war is economic. It's through sanctions, okay? It's a big tell. Now, I'm not saying it's a bad or good thing. I mean, I think Putin is awful. I think what's happening in Ukraine is awful. The point here is this. We tried to bring weapons to the Ukraine, and we fought a proxy war, and it didn't work. We were getting outproduced by Russia. We've talked a lot about the rare earths, so things are bleak in that sense. And our way to bring Putin to the table is actually not through weapons and the U.S. military. It's through sanctions, and you're really starting to see a divide where we're living in this kind of, multipolar world where you've got, China, Russia, BRICS, and then you've got the West. And we're going to continue to weaponize sanctions. Now, I'd make the argument that sanctions haven't worked. I think that they're a failed experiment. I think we weaponize them too often. They really forgive the notion that we respect property rights in the United States. But this is just very, very, very telling. Very telling. Okay, this is share of global GDP. And again, so BRICS, Brazil, Russia, India, China, South Africa. It's, yeah, I mean, listen, like US EU share of global GDP has declined tremendously. And now this isn't in real terms, by the way, in real terms. But yeah, BRICS is bigger than both combined. BRICS produces all of the real stuff that we all use. The United States has hyper-financialized. It has been a curse to be the world reserve currency issuer. We've overextended us, and the empire is starting to crack. This is China's cross-border interbank payment system. So this is in CNY. So whatever this is, 46 trillion, 47 trillion. But in U.S. terms, I have in my notes here, it's about 7 trillion. So the point of this graph is to show that, in CNY interbank payment systems, it's not that people are using the CNY over the dollar. The CNY is really, think of it like gold backed. So you have U.S. Treasuries backed dollar, and you have gold backed CNY. And to make this point, China paves way for renminbi fundraising by Russia energy giants. Next, China is cranking up its LNG trade with Russia in test for Trump. Next, China proposes rule changes to ease gold imports and exports. So what you're seeing is BRICS is building a neutral reserve system. Again, I got people in my comments like, how could you like China? Fuck you, I don't like China. Get the fuck out of here, man. I'm trying to tell you guys the truth. My message is find Bitcoin, distributed, fair, inclusive, equal technology. Get out, get out. They're building a neutral reserve system. China and Russia are getting out. They mine Bitcoin. Bitcoin's not big enough yet for their central banks to be buying in any significant size. Who knows, maybe. But they're very clearly remonetizing gold. And we're living in this multipolar world. The demand for U.S. debt from these folks, it's gone. It's gone. Even using U.S. dollar payment rails. They're building gold-backed rails, gold-backed system, neutral reserve system. And I mean, guys, I really, really think Bitcoin is going to be a big winner over the next 6 to 12 months, a big winner. The United States has to run this thing hot. They have to try and grow their way out. They have to debase their way through it. They have to. We're living in two separate economies, and the middle and lower class economy are getting demolished, they're getting crushed. They need liquidity, they need help. I don't think, because here's the thing, everything's fixable. Yeah. Could the United States go through some form of austerity? Could Trump just let everything collapse? Of course. And then everything, including gold, will have a really tough time. We'll go through something worse than the Great Depression. And then on the other side of that, Bitcoin will be a winner. All roads lead to Bitcoin. But the point here is it could be grim, it could be bleak. There could be world war. I think what they will do is what they always do. Print the money. Default through inflation. Default through inflation. It just couldn't be more obvious. Now, this last one I just wanted to show you guys. I thought it was interesting. So this is the US dollar to the Naira. Okay, look at the chart. Just look at the aesthetics of the chart. You see here before 2010, a little blip, a little bump, and then a little bump, and then a little bump, and then what looks like a massive one. Look at Bitcoin to the dollar. You see this little bump, and then these massive ones. you see these emerging market currencies collapse against the strong ones. This is the Naira collapsing against the dollar. It looks the same here. The dollar is an emerging market currency against Bitcoin. I really think the dollar is going to collapse against Bitcoin. I really think Bitcoin is going to reach gold parity in the not so distant future and then surpass gold, as it is far superior as a money, as a thing to acquire, to save, and later exchange for the things that you want to need in your life. I really think this is the story, guys. I really do. And this is the last slide. I mean, when you look at gold and Bitcoin, I mean, Bitcoin's vastly outperformed gold, and I think it will continue. And so when people say, is the bull market over? Jack, we've reached the top. I don't measure Bitcoin dollars as much as I do Bitcoin gold. We're still below all-time highs. We haven't even gotten started. We have not even gotten started. The party is just about to begin. Policy is to debase the dollar, inflate your way out, default through inflation. Bitcoin is the only ticket we are all sold. It's the only exit door we all can walk out of. And I personally think, I'm getting very excited, it's really heating up. The temperature is getting warm. I think Bitcoin is going to go nuts. Personal opinion, do what you want with the information. Okay, quick, before I wrap up, Strike. For those of you that don't care about either of my companies, it was nice talking to you. Thanks for tuning in. If you do, I got a few updates. As promised, we got rid of the direct deposit fees. So 0 fees when you get your paycheck and convert it into Bitcoin on Strike. So, for example, by the way, you can get any percentage of your paycheck. Sometimes people are like, I don't want 100% in Bitcoin. I want 10%. Okay, cool. You can set whatever you want. Your paycheck comes into Strike. You can pay bills from Strike with your cash or your Bitcoin. So some people do 10%, 90%, 50-50, 0, 100. I do 0, 100, and I finance myself by borrowing against my Bitcoin. But I get my paycheck in Bitcoin, 100%, no longer fees on that. So Strike now has no fee DCA, no fee direct deposit, get paid in Bitcoin. And we also have free on-chain withdrawals, unlimited. So you can get paid in Bitcoin, DCA Bitcoin, and get that Bitcoin to cold storage in your custody with no fees for free on the house. And we also partner with BitKey. So kind of semi-related, for all of you that use BitKey, that are BitKey consumers, have the hardware wallet, you can now set up auto withdrawals and link the two products together. So there are tutorials and videos on my Twitter, online, but the TLDR is you can now do direct deposit, get paid in Bitcoin on Strike. You can do DCA no fee with Strike, and then you can auto withdraw to your BitKey, whatever, and whenever you want, for free. Literally for free. So pretty cool feature. I'm super proud of it. I think we at Strike, it's the most user-friendly, cheapest way to get Bitcoin to cold storage, or just to get Bitcoin at all. And then for 21, you guys know what it is. My mouth has to be sealed. Our treasury is hovering around that $5 billion mark, which is exciting. Listen, I think I'll have stuff to tell you guys relatively soon, but we'll see. Right now, I'm in a quiet period. Quiet. All right. That's all. Again, sorry for the pre-record. I'm not in Chicago. By the time I would have had to do it live, it'd be well into the middle of the night. Can't do that. So this was fun, though. This was fun. Thank you guys, as always, for listening. It always means the world. I really, really do appreciate it. This is... Don't tell my employees, but this is arguably my favorite part of my days and my job, although I don't get paid for this. So thank you so much. We'll do some maybe extended Q&A next episode. I'll be home, so we'll do some extended Q&A where I can answer all your questions to make up for this one. But get yourself some Bitcoin. This is new policy. The dollar's going down. Own something that will go up. Buy Bitcoin. Buy Bitcoin. Love you guys. Peace.